NCBA, the mammoth entity that brought together NIC and CBA as one. Today on the Trading Bell, we are going to be talking to the Group Managing Director, John Gachora, all about the new entity, what we can expect, what has been done so far, and much more. But first, take a look at his profile. John Gachora was named the Group Managing Director of NCBA Bank in May 2019 as part of the merger of NIC and CBA Bank, which was first announced in December 2018. Mr. Gachora has extensive experience in the banking sector, having worked in Kenya, South Africa and the United States. He joined NIC Bank in September 2013 as the Group Managing Director and an executive member of the board. Prior to this, he held several executive positions at Absa Bank in South Africa, including CEO of Absa Africa and Head of Investment Banking, Sub-Saharan Africa, as well as the Managing Director and Head of Corporate and Investment Banking in Barclays Africa. Before moving to South Africa, he spent close to 15 years in the United States, where he held several positions in the American banking industry, including in Bank of America and Credit Suisse First Boston. While at Bank of America, he rose through the ranks to become a managing director and head of the financial engineering team. Mr. Gachora holds a master's degree in electrical engineering and computer science from the Massachusetts Institute of Technology, MIT, USA, as well as an MBA from the Wharton School, University of Pennsylvania, USA. Welcome again to the program.
Thank you, Malika.
Last time I spoke to you, you were just at the cusp of this merger. You hadn't even told us the new name yet.
Yes.
So now that we know the new name and, all steam ahead for sure, how are things going?
So far, so good, Malika, and thank you. Thank you for having me here, first of all. It's been an amazing 10 months of work, which culminated in the creation of this new bank, NCBA Bank. It's quite an exciting journey for all of us. I think the future for now, the combined bank, is fantastic, and we're just going for it.
Okay.
Yes.
So in terms of specific products, is there something new that we're going to be seeing? Because we do know that when it comes to asset financing, retail banking, these are the strong suits that you're trying to bring together, especially with NCBA coming together.
Yes, so I think, when you bring these two entities together, that in a lot of ways we had a lot of similarities, but there were quite a few products that were available, suite of products that were available in one bank that were not available in the other. When you bring them together, certainly is to make these opportunities or these products available across the two organizations. But let me start by saying that these two organizations that came together to form NCBA had distinguished themselves on a number of things. One was customer service. We are known for customer service excellence. And if there is any one cultural definition that we would use for the new NCBA Bank, is that the customer is at the center of everything that we're going to do, inspiring greatness in their own desires and their own ambitions. That being said, certainly, if I look at one side of this merger, which was NIC, as you correctly pointed out, we have been known for many years as being the leaders in asset finance. And we feel that this product, this service is to be made fully available to our customers of NCBA who previously were customers of CBA. If you look at the ex-CBA side, they were known for digital innovation, digital leadership, wealth management. Those are abilities, products and platforms that are going to be made available to the former NIC customers. So I think bringing the best of both is what we are talking about here, and that is what our customers should expect to see.
Okay, and you've talked about, of course, the fact that this culmination has also resulted in services being doubled for both. But let's talk a little bit about the rationalization. You said by 1st November you want to see, all of the branches operating fully functional, and we've also seen that about 105 or so are being the rationalization was going to cover those 105 branches across East Africa, I believe. What has the process been in relation to bringing the accounts together? Because also other banks factor into this, right?
Well, I think, Malika, the word rationalization is perhaps the wrong word because it has other connotations. I think what we said is that by 1st of November, we will take a month from 1st of October when our merger became effective to the 1st of November to make sure the systems are speaking to each other.
Okay.
That if a customer who formerly was a CBA customer walks to an NCBA branch that was formerly an NIC branch, the service should be seamless. They should not feel that there is a new bank in town. They should feel there's a new bank in town, but they should not be hampered to be in terms of service. That's what we said we are going to do through the month of October. We have made tremendous progress. And in fact, a customer today who walks into one of the ex-NIC or ex-CBA branch will get served today because we have made sure that the systems are interoperable. We have cross-trained our staff. We have, in fact, swapped staff so that when you go to a branch that was previously a CBA branch, you will find an ex-NIC staff working there as well, and vice versa, to ensure that customers feel welcome. So that's what we talked about. So it was not rationalization in the traditional sense of the word. It was integration of systems, of people, of service, and of process and practice. That's what we're working on.
Okay, I'm glad you mentioned staff because
Yes.
I believe coming together, the staff ballooned to about 2,400 employees close there. You know, we've seen a wave of retrenchment in a lot of other industries recently within the country. You bringing both together, was there any overlap or any sense of, and how did you maneuver that while keeping everyone still employed?
Look, I think I must say this probably will be talked about as one of the most successful mergers for a number of reasons. And one of the big reasons is what you mentioned, staff, because at the heart of every merger is people. And if you don't take care of people, I believe that's why a lot of mergers actually fail. So very early on, the board decided that they must consciously take care of staff. And the decision was made that going into this, if truly we are talking about a growth story, and if truly we believe we have some of the most fantastic people in the industry, then we must find a way to keep these people. And so we worked real hard at the very early beginnings of this merger to ensure that the new bank, its structures, its ambitions, its development plans, and its strategy accommodated the kind of deep, smart, and great talent that we were bringing together. So the 2,300 people, 400 people that we have put together, each one of them today has a job and is a meaningful job in where we are. That's the other thing that we made very clear to ourselves, that we don't want people to have jobs just to show up. We want to have people who have meaningful jobs. I think the other part I would like to mention to this is that one of the reasons we brought these banks together was to be key players in the Kenyan and the region's economy. And I think we stated that at the very upfront. And our feeling was we cannot claim to be players in the economy, to be significant to the Kenyan person who is giving us, or the society that's giving us the leeway to operate. If our first act is to have jobless people, to have mothers who cannot take kids to school, to have fathers who cannot take care of their sick parents, we felt that we did not want any of our staff to be part of that newly unemployed group. And that was a conscious decision that we made.
Fantastic. But even as we talk a little bit about the merged entity being the third largest now in the country, in its league, you did list very recently shares under NCBA now on the bourse. So tell me a little bit about that, because a lot of experts have said that possibly those shares could even spike up to 50 shillings and plus.
Well, we hope so. We hope so. Look, I think we have a fantastic growth story to tell. We have fantastic strategic plans for the future. I think anybody who knows our legacies know that we are performers. We deliver. We do. We live for our customers. We live for our people. And if somebody believes that story, then this is a great opportunity to be part of that story. So listing the additional shares on the Nairobi Securities Exchange affords opportunity for more investors to become part of this journey. And we do invite them to be part of it.
Okay. Also, what strategies do you have now to promote financial inclusion in Kenya? Recently, we've been talking about the rate cap and the fact that now the president does want it to be reconsidered. The repealing should be something that he is championing at this point, because he did veto that. And we're still in the process of seeing how that will pan out. So, of course, you cannot comment directly on whether or not it will be repealed. But financial inclusion seems to be symbiotic with this particular cap.
Yes and no. First of all, let me start by saying that NCBA has been at the forefront of financial inclusion. Many people may not always remember that Mshwari, which has played a significant role in financial inclusion, is the brainchild of both CBA and certainly Safaricom. And the success of Mshwari certainly speaks to the work that NCBA will continue to do on financial inclusion. But beyond that financial inclusion, I think there's a next layer, which is formally banked people, which is, I guess, where the rate cap question comes in. Again, I would like to say this. When I travel around the country, most people would tell me about their first car, their first truck, their first tractor was financed by a bank called NIC Bank. And really, that's what people have known NIC Bank for. So coming together, bring together CB and NIC Bank, both banks that have played significant role in financial inclusion, because these are farmers who have trucks in the slopes of Bungoma, in the mountains of Kisii, and the open lands of Mandera, who remember that their first trucks or their first bus, their first matatu was financed by NIC, or there are these young ladies and young women who are trading in Gikomba, who woke up at 4 a.m. and borrowed money to go buy potatoes that they're now selling off the Mshwari platform, and who are telling everybody, please pay me through M-Pesa so I can put it on Mshwari and start earning some interest. When you combine these two sets of customers and you bring them together, that is what financial inclusion to us it means, and it should mean to all of us. So now, speaking about the interest rate cap, therefore, one of our passions therefore has been to continue this journey of serving SMEs. They must continue to afford those tractors. They must continue to afford those trucks, those matatus, those Uber vehicles, and whatever other vehicles they are looking at. And certainly, the interest rate cap did hamper or did make access for some of them a bit more difficult. So for us, our field and our desire is to continue serving these SMEs, and we will continue to support them as we have always done.
Okay, and as we wrap up, any final comments you want to share with your shareholders and investors about NCBA, and of course, what more we can expect from this merged entity going forward?
Look, as I've said, we brought together two very, very good banks, really good banks, extremely well governed. And as a shareholder, as an investor looking to be part of a growth story, the things you'd look for in a bank, I always say, are first the governance, two the management, and three the innovation. Three things that I think we speak strongly to. So I think it's a great opportunity today. We are now listed the additional shares on the NSE for customers. I think customers are probably sitting back and saying, okay, what's new for me? What I want to say is this, that again, we've talked about the products, but it's not just about what we have. It's the journey that we're embarking on to ensure that we create more products, more platforms for our customers, and to enable their lives, to make their lives easier. Our new motto speaks to inspiring greatness. And that is what we intend to do for every customer, for every staff member, for every stakeholder, to inspire greatness. And finally, we've talked about our Pan-African ambitions, that we want to be the driver of the Pan-African journey for Kenyan banks as they march westwards to meet with the South African banks that are marching north, the West African banks that are marching east, and certainly the Moroccan and Egyptian banks that are marching south. Thank you very much.
Thank you so much. So clearly lots to see yet in the time to come from NCBA. On that note, we're going to take a short break, but when we come back, we'll have the market analysis for you right here on the Trading Bell. That means the markets have closed. Thank you for staying with us on the Trading Bell. And of course, we want to take a look at the numbers this week compared to last. As always, we have the experts with us. This time around, joining me from Genghis Capital is Patrick Mumu. He is a research analyst. Thank you for making time for us.
Thank you for having me.
Great. Let's begin with our all-share index. We're seeing it's going up by 2.31%. Is that significant?
It's not significant at this point in time, though a couple of weeks you might be able to tell, because recently I've been seeing market go up and down. So you find these weeks are probably evening themselves out. What is really key to note here is the foreign participation, which has improved over the last few weeks compared to last month. And that now is bringing with it improved investor sentiment, and we're seeing the markets also react to that.
Okay, and if we look at our movers now, of course, Safaricom is up there. They did celebrate 19 years this week. Anything that's, different in the volumes?
If you look at Safaricom keenly, even over the past few years, before they release results, there used to be there tends to be a rush in terms of turnover and also price movements as investors try to take positions before the announcement of results. Looking at the announcement of results next week, we're expecting double-digit growth, and PESA is expected to also be a big contributor to that growth in PAT, but also we are cognizant of the fact that some of the revenue channels and the M-Pesa, such as betting and gambling, which accounts for 7% of that revenue, is subdued, but it's still expected to be quite robust, and we're seeing investors react to that quite positively.
Okay, aside from that, a lot of banks, as always, KCB, Cooperative, Equity, and INM as well.
Yes, so if you look at the banks, this is on the back of the president refusing to assent to the Finance Bill 2019 and the reservations brought about by the interest rate caps and calling for a repeal of the same. So we are seeing investors taking positions slowly, but the moves have not been that significant as expected. So we're waiting over the coming weeks to see some actual movement when looking at the banking counters.
Of course, we're waiting to see if we can get that 2/3 majority from the parliament in order to actually overhaul the president's decision in removing the cap. But most likely we'll see, of course, how things play out with the rate cap. Let's take a look at our gainers. Something that stood out to you there, we were talking about the NCBA shares.
Yes, so if you look at NCBA and the recent merger, it has gained quite significantly over the week, and that's looking at probably a correction. If you look at the trading levels or trading metrics for NCBA and compare it to some of the larger banks, because currently it's the third largest bank in the country.
Yeah.
Equity Bank and KCB Bank are trading at multiples of above 1x price to book. NCBA is trading at 0.6 times, which is quite low. So you're looking at investors looking to speculate in that counter and seeing significant value in driving that particular stock. But if you look at some of the other metrics, they are less appealing than the bigger banks, like the return on equities, relatively quite low at 15%, and net interest margins also are quite depressed at 5%. So they might not quite reach that level as the first two banks.
Okay, and of course our losers, we've got a couple of them that were intriguing you that you were telling me about earlier.
Yes, if you look at one of them, Bamburi, Bamburi, there's been a slowdown in the cement sector. And this past week, management came out and said that they were struggling with high fuel and power costs. There was a directive by the president around late last year regarding reducing power costs. I don't know what happened to that, because most of the manufacturers keep on complaining. Second was the slowdown in government projects, like SGR-related costs. There was a lot of demand, and also slowdown in the construction sector. So this is leading to depressed earnings for the cement sector in general, and especially Bamburi. So that's why we are seeing the counter there beginning to lose.
Okay, and also we've got NMG as one of the losers there by 7.09%.
Yes, so if you look at NMG, it's been paying quite a high dividend, translating to an extremely high dividend yield, and that has been unsustainable. Investors are beginning to factor that into the market, and we are seeing a correction of the price downwards to reflect that eventuality.
All right.
Yes.
And of course, with that, we're going to now take a look at Markets 101. And now let's get into our question, because this time around NCBA has been talked about extensively. In fact, the question we picked from all of those that came in from you was this one: will my shares be affected if I owned NIC shares now that NCBA has listed as one entity? So what happens there? Patrick, I'll let you take over.
So in this case, what we have is a consolidation. In a consolidation, a completely new entity is formed, in this case NCBA. And what happens is that if you're an NIC shareholder, you retain the number of shares you have. However, new shares have been created to accommodate the CBA shareholders.
Okay, thank you very much for clearing that up for us. And on that note, let's take a look at the NSE Historical Fact. Well, that brings us to the end of this episode of the Trading Bell. But Patrick, before I let you go, a quick one. How do you see the NCBA counterperforming in the coming weeks? Just a quick speculation from you.
I think it will remain depressed, and much of activity will rather be triggered regarding the interest rate caps and the movement, whether they're going to be repealed or not. So it will likely take the movement of the interest rate caps rather than bank-specific factors.
All right. Well, thank you for joining us.
You're welcome.
And with that, of course, we're not just done. You can always keep up with us through our social media handles that are appearing on your screen. This episode, we have been talking all about NCBA, and of course, we had the Group Managing Director, John Gachora, with us as well. But in the next episode, we'll have even more guests and even more exciting conversations. So stay with the Trading Bell, keep up with us, and enjoy your evening. My name is Malika Kazia.